Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hi, everybody. Welcome to Mortgage on My Mind. I am Natalie Salins, your host, and today we have Philip Ganz. He is the founder of Next Wave Mortgage and a multi-state licensed mortgage professional with expertise in residential lending and real estate investing. He owns rental properties and is known for applying data-driven SEO and digital marketing strategies to modern mortgage and real estate education, which is amazing. He's been in the business a really long time, just like myself. We were chit-chatting before we pressed record, and we have tons in common. He started so long ago, and we were chatting about the differences in how we used to get mortgages and how we started and what we understand what it is to be a veteran loan officer as opposed to like new loan officers. And Philip, thanks for being on and joining us today.
Oh, it's absolutely such an honor to be here and reconnect with the legend. I'm really blessed to be here and help out your audience along their journey of home buying.
Thank you so much. Yeah. So tell me a little bit about what I just mentioned, the idea of being a veteran loan officer and what that means for our buyers and the difference that it can bring, and maybe some like strategies of how being a veteran loan officer makes things so much easier as opposed to being a new loan officer.
Yeah, because I think a veteran loan officer, you had done mortgages before everything became so easy online because a lot of the nuances of a customer are missed with this automation. It
Right.
goes quick. Sometimes you don't even need to verify these rapid pre-approvals. But a rapid pre-approval doesn't always equal a rapid loan closing. In fact,
Sure.
it can actually mean a lot of heartache and crying, right? And
Yes.
that's why a veteran loan officer will really drill down into the details,
So
you know?
true. Yeah, it's funny because everything is so automated, and I come from like dinosaur land of printing out every single document I got from my buyers. So when I first started at Countrywide, I used to have to print entire files and make two copies, print files, two full copies of them. They were in order of prelim, escrow instructions, blah, 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 blah. And then on one side, it was for all the buyers' stuff, all in order of like income, assets, credit, so on and so forth. And then we would ship one file to our underwriters. Remember those days?
Oh my
And
God.
so we would have to ship every day. The FedEx came to the office to pick up all the new files that would get FedExed to our underwriter to review, to put in line to review or whatever, right? It was so crazy those days. But because I had to print everything, I touched everything. So every single tax return, I would do the calculations on the piece of paper. I'm very math driven. And so I didn't even use calculators. I was always writing everything out and calculating DTIs and doing QMs by hand. And I remember when I first moved to Movement, it was like 9 years into the business for me. They were doing things online. And one of my head underwriters pulled up the tax return on the computer. And I was like, how can you read it? Like, how can you even see? I have to print it. Here, look at the printed version. It's much easier. Like, I don't obviously do that now. That really left me about 10 years ago. But I just feel like people don't always use common sense with qualifying somebody as far as what is the debt and what is the income. And because systems make mistakes all the time. We're like, my like assistant will be like, hey, the ratios are at 70. We have a problem. And I'm like, how are the ratios at 70? His debt's 5,200. He makes 11. Ratio should be under 50. It's that simple. But people don't think that simply. And sure enough, it was calculating his mortgage twice. But if you don't actually just sit and use your brain for a second, and that's what comes with being a seasoned loan officer, truly understanding what creates and makes up a ratio.
Absolutely, because a lot of times as a seasoned loan officer, you're going to ask for the year-end pay stubs. And for the listeners, the reason why I would always ask for the year-end pay stubs is that if you have any variable component of your income, the underwriters typically want 2 years consistent, right? They don't want to see from high to low because they can totally neglect it. They can say that's too much of a decline. We don't want it.
Yeah.
They want to see that it's solid and it's stable income. So this is very important. And by providing this, the underwriter will automatically use it versus we're only going to use your base income because you haven't proven the rest of the income. We're now going to put your loan in suspension or non-decision. And now we got to chase down an HR lady. Now things are delayed. And you could have just provided your year-end pay stubs in the beginning.
From the beginning. Yeah. One of my first questions when I get on an intro call is, are you salaried? Great. Do you have variable income? And I ask it straight, do you just earn base or do you have variable income? Do you earn bonuses, overtime, commissions, anything like that? And if they say yes, it goes in the note from the very beginning to provide end of year pay stub. So that
That is,
right.
yeah, that's great. That's what you need to do to prevent that. And that's not what's on these online applications. It's about how fast can we go to get pre-approval. It's not how accurate we can be.
Correct. You can still go fast. Me asking that one question takes 5 seconds, right? So you can still go fast. It's just about honing in on the importance of very specific things. And I think that's what comes with being a seasoned loan officer, understanding where you've made the mistakes in the past so that you don't make them again. Even though
No,
they're
I
really,
totally agree because
yeah,
variable income is like the number one reason where people run into issues is the miscalculation of income and getting it right in the beginning where you can tell the story, they get behind. If you don't submit the story or letter of explanation with these pay stubs, sometimes the
totally.
file can get suspended. And once it gets suspended, it's much more harder sometimes to overturn than to just have it right the first time.
Yeah, totally. We were talking about that. What is the story? Like when I first started, my mentor said to me, the most important thing you do with a file is look at it, structure it, and create its story because you're the one who has to tell it to the underwriter. So you have to create the story you want the underwriter to see and read, making sure that you're keeping out the stuff you don't want the underwriter. It's not important for the underwriter to read, but create and stick to this story. Make sure it's a clean story, but like you're the one who is in charge of this file's story and completing it.
Yeah, because I think what the customer has to realize is the customer is the hero of the story. You are the hero, and our job is to make sure things go right and you have a good ending like a Disney movie.
And as smooth as you can. Yeah, exactly. Exactly.
Because you want
So,
a good process, anyways. Yep.
yeah, no, you want that. That's the thing. So, what do you do when you first start with a buyer that is essential?
So what I do is I go over like the core items, usually what they need. And for a lot of people, that's your most recent pay stubs, your last two W-2s, and a breakdown of your last 2 years of your pay stubs, and then obviously a copy of your driver's license. The mistakes are always typically made within the income part, and I'm always going to look at your driver's license to make sure your legal name is the same is what you typed in. For your husband and the wife, especially for multiple borrowers. Not everyone knows everyone's legal name. I know that seems so crazy, but I think that is really important. And that seems like really boring, but sometimes boring wins.
Yeah, absolutely. When people are doing their own application, everybody makes mistakes. We're all human. Like I was saying to you, I have a client that like just missed a number in her social and we pulled credit. Somehow the credit was good. And then when we fixed the social and changed that number, credit came back. It was still good, but it came back 30 points lower, right? There was a mistake on the social. It was pulling up incorrect information. So
And
little
that
things,
causes a lot of anxiety, right? Because no one wants the mistakes,
of
but
course.
you want to be able to make sure that everything goes really smooth. And I'll tell you this. So the first thing, that's what I do is I collect everything. The next thing that I always do is a lot of people from that point go to pre-approval, but another best practice, because I always want the customers to understand all their numbers. And I think a big mistake that a lot of customers miss is their cash to close. How much money you'll need to close the transaction. So I always
Hmm.
afterwards will send like a loan estimate or like a cash breakdown of what's needed, because I want them to understand the rate may change because you're not locking in usually a pre-approval, but I want you to understand all of your numbers. And this is
Yeah,
like so important because if you
so
need to go
important.
a gift, you want to go a gift. And I want to make sure also before you even go under agreement that you know what you'll need so you don't back out at home inspection or freak out. So I like to make sure we really drill down of what you'll need, what your monthly payments are, and reverse engineer the process, because a lot of times the first time home buyer's biggest purchase was a car. And the car dealership, because they're under different regulations in the mortgage industry that are way less strict, they can do test drive your car and then you figure out what you qualify for, right? And what
Hmm.
people think is, I'm already so strong, I don't really care. But even though you can go to 5 or 6 times your annual income, so if you make 200, I can go to 1.2 million. You'd be a crazy person to go to your maximum. Horrible. And
100%.
I'll tell you this, the only people that go to their maximum that want to are either people that are married to someone that isn't on the application, which is fine because for whatever reason they don't put them on. Maybe they have poor credit, or someone that has like a lower credit score, and that's why they have a lower credit score.
Or self-employed,
Yeah,
right?
self-employed.
So a big part of it is
Self-employed.
self-employed. The reason we can really take a file to that 50% debt to income ratio is for people who are self-employed and write off a lot of their income. So then we're pushing it to 50. A lot
Agree.
of my files are because I'm out here in LA land, so a lot of my files are self-employed people who like have interesting income. They are not just standard W-2 salaried people because it is a different conversation. But that, like you said, is why it's so important to talk to your people and discuss with them what their comfort levels are, not what they can afford. If I have a salaried person, I rarely even tell them what they can afford. We chat about, all right, what you put in the app was 1 million with 20% down. These are the numbers. How does that feel? And my ratio will be like 20 if they're just salaried. I'm not going to tell them they can afford $3 million. What's the point of that? But it is true. And it's part of the conversation that you say, listen, we're qualifying you to your gross, and you don't take home your gross. So you will never feel comfortable spending what I'm going to qualify you to because it's simply not what you're actually bringing home.
That's such a beautiful way to put this together, is that you're actually qualifying them on the gross. And they get in such nautical numbers, right? And I get this all the time. People will say to me, because they see me online and they'll say, what rate? They'll talk rate. And once we start talking about the monthly payment, they're like, whoa. They're like, this is way more house than I thought. And it's because the pre-approvals, a lot of time, it just says what? Purchase price, loan amount, LTV, loan program. You know what a pre-approval doesn't have? Your monthly payments.
Mm,
And the other thing, and I know this is true a lot of times, right? Say you use Zillow. Zillow, and this is my family in California, Zillow uses what the current taxes the seller is paying. This
okay,
is true.
always. Yeah.
And what happens that, like, I know in California, there's that what Proposition 13 that if you what bought a home before the year 19, I think it was 1982 or something like this, or some year that like your taxes don't go up. So you could have grandfather or someone that inherited the house through a trust and they're paying like $3 for a home. And Zillow says $3, right?
Yeah.
And in Florida, it's the same thing. It's capped some like every year, right? That you're like, oh, my taxes are going to be this. No, that's what the seller is paying. In fact, that's what some builder got in trouble for this. I think it was D.R. Horton, right? Because they owned the title company and the title company was putting low numbers in for the
Mm,
taxes. And then there was the lawsuit because you had a whole bunch of people that didn't qualify and their payments went like way up. And this is illegal to do. And so that's why it's so important to deal with a seasoned person because if you slow down the process, that's why it creates a better understanding of what's going on.
exactly. Truly. I think there's just I, whenever I'll talk to like, sometimes I train loan officers and things. I always say that the best way to learn is to make the mistake. And because I've been in it so long, you've just made so many of those mistakes that from the start, how to mitigate not making them, how to get through a file, because it's such a tricky business. It is not easy. Even if you do it perfectly, you're still going to make a mistake. Or there's still something that's going to come up that you're going to be like, what? Like out of nowhere. When did that become a guideline? I read my guidelines and updates from Fannie and Freddie. Like, when did that happen? Because it's ever changing and ever shifting, and things are moving, and guidelines change, incomes change, and the way they look at incomes change. So it's just always shifting. And I think as much as you try to make it smooth or you think you're perfect and know exactly what you're doing, things happen. It's loans.
And that's what our job is to minimize mistakes. It's almost like golf. There's this long distance champion golfer, I forget his name, but he could drive the ball. I think the record is like 578 feet. That's the longest, which basically means that this guy can almost, if he was perfect, can hit a hole in one with every time he goes up. But the reality is, he can't even make the PGA Tour. And you're like, why can the guys that are the greatest long distance players, which Facebook loves, can't make the PGA Tour? And it's because the real golf is about not making mistakes. It's a game
Ah,
that minimizes mistakes. It rewards don't make a mistake and it penalizes if you do make a mistake,
I
right?
love that. Yeah.
And that is the way loan officering or mortgages there are, is that you don't get bonuses. You might look cool for having more flash, but you will get penalized so severely if you make mistakes. And that
So
is
true.
what a seasoned loan officer does.
Yeah, it's so true now with like TikToks, and I see loan officers that have these incredible social like videos and like they're creating songs and they're like incredible and have so many followers. And then you're like, they've been in business 8 months. So they're like an influencer that turned into a mortgage loan officer. And in my head, I'm thinking like, oh my God, Natalie, I have to pick up my social game. I'm so bad. My head is always in my computer and I'm always working. So having to figure out doing videos like that is so nuts. But then I was like, let's see how long he's going to get through this because he's making mortgages look so easy and they are so specific and particular. And it's not an easy thing to do. And so, like, he can sing and do his TikTok dance all he wants, but if he's only in the business 8 months, he is not taking a complicated file and knowing how to structure that. and figuring it out and getting it in front of an underwriter correctly.
I'll tell you something really cool. That if you master the skills of being a great loan officer, like you're like old school. I had a colleague that he was on my little league soccer team from Newton, Mass, and he actually did mortgages at one time. And he was making the transition. He was in California. And he was making the transition because at the time my grandparents were selling the house. I think he was making the transition because when you got your mortgage license at one time in California, you also got your real estate license, I believe, right?
Yeah.
And
When I got my mortgage, when I needed to get my mortgage, I had to get my DRE license first. I had to become a
yeah,
realtor
yeah, it
first.
was
Yes.
something like this,
Yeah.
right? And he was making the transition and he had to help me out, right? And he was like really smart guy. And he had just made the switch. And I really respected him because he was really good at details, this guy. And people might know him for Flash, but he's really smart and he's like super good at details. And he actually doesn't get enough credit of how smart he really is because he thinks like a chess player. And you're like, who
Great.
is this guy from Newton, Massachusetts? Now, for your listeners, his name that you definitely will know is Josh Altman from Million Dollar Listings. And
Oh, wow.
he is from Newton, Massachusetts. He had
And he was
moved
a
out.
loan officer?
He
I didn't
had
realize
done
that.
mortgages with his brother Matt. And
I've done loans with Heather, with his wife.
yeah,
We've closed a few deals out here, of course.
with
Yeah.
their wife, but Josh had started off
Yeah.
doing mortgages and he was like very smart. Like he like packed up buses of people to take them around the tours, but he was already making the transition because you could think I think that's what people don't realize that where he doesn't that it doesn't show or if you actually had met him or know him that I knew he was always going to be good. That he was so smart at thinking multiple
You
steps
can
ahead,
see that in him, though. He seems like a smart guy.
way smarter. And I'll tell you this: one of my best friends is this guy Dave Malowitz. That I used to vacation with him. We're very good friends with him and Josh. Much better friends with him. And I will say the most impressive thing of when he moved out that I didn't even know, but I'll tell, is that when he did the networking events, is that he has such an emotional intelligence and he's so smart that he would fool people of that if he was ordering like a that people thought he'd order a vodka. He didn't. He would just drink water. He never drank alcohol when he was networking. People thought he was, but he was extremely disciplined.
Yeah,
In the
I
in the
believe in that.
world of flash and booze, this guy is a planned out shark, but I think it's much easier because he had the natural skill set of being a dynamite loan officer. And that's probably why Heather would want to work with you. You're so detailed and you're so good that they wanted to work with someone that's so good with the details. It almost reminds me of when I was 24 years old, I had to get a hernia surgery. And my dad's a physician and he recommended his doctor. My dad said, after my meeting, how did it go? How did your meeting go? And I'm like, Dad, I was almost in tears. He said, why? I said, because he told me I might die. I said, that's so ridiculous. He said, no one's died of a hernia surgery. And I said to him, I said, yeah, there was one guy, Aaron Hernandez's dad died of hernia surgery. And my dad said, this is so ridiculous. He's older, you were younger, and this is 99.99% chance. But he's an unbelievable surgeon. He doesn't have great bedside manner, but he's the best at details. That's what makes him a great surgeon. That's what makes a great realtor. That's what
Of
makes a great
course.
loan officer. And that ultimately makes a great golfer, right?
Sure. I mean, I think anyone who is very detail oriented is going to do jobs like we do best, right? Because what we're doing is extremely detailed with reviewing so many different compartments of somebody's life. We have to review all the assets, all the income, all of the credit, all of the history. Like what we do is detail oriented as a job, as a profession. So, of course, if you are good at the details, then I think obviously you'll do very well with this. Also, you need to be a little bit good at math. And then, more than those things, you have to really be a salesperson.
You do. You have to be relatable. And I
Yeah,
totally get that, right? You need to be compassionate. You need to be able to listen. There's always a story.
totally. Yeah,
There always
exactly.
is. But you know what? I want my loan officers like my pilots. I want them a little bit older. You don't want like Spirit Airlines. I remember I went once on Spirit Airlines. It was the worst experience. The pilot was like 18. Yeah, you don't even have to get like it's easier to get like a to be able to fly a plane with Spirit than I guess it
That
is.
is frightening. That
Yeah,
is
it's a
frightening.
school
Uh-huh.
bus with wings. And by the way, I remember when he got on the things, he's like, yeah, Boston to Myrtle Beach, 2.5 hours. I'm going to try to make it there in like an hour and a half. I'm like, how is this possible? But it was like a 16-year-old driving a car. No
Um,
gas, no brakes. And the landing was like, thump. It's just like, as fast as that little thing could go, it went. And the landing
totally.
was
Oh my
so
God.
rough. We made it. But it felt like
Yeah.
a movie where they're trying to land it on the lake, the emergency plane. But
Yeah,
no reason to. We were just landing, you're just driving
of course. You just want to be safe when somebody
you
is
want to be
flying
safe.
anywhere. Do you
That's
know
what
what I
I
mean?
want.
Yeah. I love that analogy though, because it's so true. Like flying, you want your pilot to be more seasoned and older in the same way because it's important that you land the plane. That's all that's important when it comes to a mortgage escrow and a purchase escrow is that you land the plane. And as
Yes.
with as smooth a landing as possible. That's what's important. And that needs a little bit more of a seasoned pilot to do that.
And the
It's
more
a great
preparation,
analogy. I've never thought of it.
yeah. And the more preparation you do in the beginning, the less you'll do on the end. And that
Yes,
matters, right? That'll take away the anxiety. Meeting all the underwriting conditions early is much better than meeting them late.
100%. 100%. Thank you so much, Philip. This was awesome. So fun. I appreciate you being on today. Everybody, you can find Phil in the below. Obviously, he's like the most likable, lovely person. Please call him if you need anything. And it was just such a joy. Thank you so much for being on today.
Well, thank you so much for having me. It means the world. And just want to let the audience know I've had so much for Natalie for so many years, and she truly is the best.
Oh my goodness. Thank you so much. We don't know each other, and it means so much to me for you to say that's like too much almost. But thank you again, and I look forward to staying in touch and everything.
Absolutely.
All right, everybody, stay tuned for the next one. Thank you for joining. Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.